Hello and welcome. Well, it's the fourth week of November and it's winding down really fast. It's looking positive for Nigeria's stock market, which we have seen a back-to-back gains this week already. So let's see if we're going to get another one today. The trading session has begun right now, but let's get to the top stories that set your agenda. Oil prices have risen marginally. Today's geopolitical concerns over escalating tensions between Russia and Ukraine that countered the impact from a bigger than expected increase in U.S. crude inventories. So we're seeing the impact on Brent, 0.2%. So we're seeing Brent there trying to hold that $70 range, $72.97 a barrel, 0.2% up. On the flip side, the U.S. grade, that's the one, Dangote Refinery, that's the one they like to import, and it's 0.2% down. So that's good for the refinery, $68.91 a barrel. So that's getting cheaper. We're still seeing pressure on oil prices right now. But let's get a check on the FX market. The close yesterday, we'll go to the FX market, but we'll see the NNPC Limited has launched a new crude oil grade. That's the Dangote blend on the global market. It was unveiled at the August European Crude Conference in London. The blend is praised for its low sulfur content and high value yield, attracting buyers from Europe and the US. NNPC E&P Managing Director Nicholas Fourcade says that production from the Dangote field in Akwa Ibom State has reached 40,000 barrels per day, with exports already underway. He adds that plans are also underway to increase output to 80,000 barrels per day by late 2025. This launch highlights NNPC's commitment to boosting Nigeria's crude production while prioritizing environmental sustainability and adding value to the global energy markets. And talking about the FX market now, we know we get most of our FX from that. From those are sales there with the crude oil, NAFEM, NFEM, 0.51% down. So we're still seeing weakness there. Was down by, for NAFEX, down about 2 naira 38 kobo. 0.14% down, closing at 1,681 naira to the dollar. That's for the NAFEX window, not far off from the NAFEM or the NFEM window from a previous trade of 1,678 naira. They're close to at 1,687. So trading has begun also in this market. Let's see if we still see volatility in that market. And yes, it's money sharing season, and a sum of shared of 1.41 trillion. That's what was shared between the federal, states, and local governments by the Federation Accounts Allocation Committee, FAC, as total revenue distribution for the month of October. The amount, which comprises of statutory revenue from value-added tax, excise duty, and other sources, is higher by 8.9% when compared with the 1.298 trillion naira distributed in September. A brief breakdown of the revenue allocation report released by the Office of the Accountant General of the Federation shows that the federal government received 433 billion naira. That's for the federal government. State governments received 490.69 billion naira. Local government councils, 355 billion naira. That was what they received. Then relevant states, 132.4 billion. 13% mineral derivation revenue, then gross statutory revenue, 1.36 trillion. Then we have the total distributable revenue of 1.411 trillion, and that's basically what was shared right there in the month of October. So all the stories, the World Bank has awarded Imo State $4 million, so that's about 6.8 billion naira, for promoting accountability and improving the ease of doing business. The reward comes under the State Action on Business Enabling Reforms program, that's SABA. Imo State's Commissioner for Information, Honorable Declan Mulemba, who made this known at a press briefing in Owerri, says Imo is one of only 4 states in Nigeria to qualify for the award. The states were evaluated on land administration, regulatory frameworks for private investments in fiber optics, investment promotion services, and transparent government-to-business interactions. Take a listen.
There is no doubt that the manufacturing sector operates in an climate environment. Manufacturing performance continues to be constrained by high cost of diesel.
Apologies for that. That was the wrong one, but we're going to get that track ready for you. That's from the from Imo State there. Quite an impressive award, and definitely we hope more states, get that same award at this point, because that would generally impact on everything that's playing out in Nigeria. I'm sure we have that track now.
But there are four major criteria, four major frameworks for assessing the states. And when the World Bank is satisfied that those state has met those criteria, he now rewards you with this handsome cash. And the criteria is based on, one, is the efficiency of land administration. Two, the regulatory framework for private investment in fiber optic infrastructure. Three, services provided by investment promotion agencies and public-private partnership units. And four, the efficiency and transparency of government-to-business services in participating states. All the investments that the governor has been making in terms of ensuring that there is good governance, all the trips he has been making to attract investors, and all the infrastructure he has been providing in the state to ensure that investments flow, they are paying off. And the results are what we are seeing.
All right, let's look at Nigeria's real estate sector now. It's been significantly influenced by a combination of inflation, currency devaluation, which has also impacted both domestic and foreign investments into the sector. In 2024, real construction growth rate, that dipped in the first quarter, but rose again in the second quarter. We saw a recovery there. Data from the NBS. So there was a major drop right here in 2020. That was the second quarter of 2020. Q3 got a recovery. Then fast forward all the way to 2024. Q1, we saw that dip there. Then a recovery for the second quarter of 2024. Then if you also look at prices of real estate, because of what we've seen with inflation and currency devaluation, also being an import-dependent economy. If you look at the property prices so far in the likes of, let's say, if you're trying to get a detached house in maybe Adeni Jones now in Ikeja, that's highbrow, that ranges from about 350 million naira. If you're looking at detached in, say, Ogba, 250 million naira. And these prices were not like this. When the exchange rate was pegged at around 400 to 300 naira to the dollar. So these were maybe ranging around 50 to 60 million. But with the devaluation we've seen so far, then if you come all the way to Lekki Phase 1, 750 million. That's the going range for detached house. Then areas after Lekki Phase 1, let's say Orchid Road area, that's attracting a massive 300 million if you're trying to buy in those parts. Then maybe low end, the low end area, somewhere like Ojodu is now commanding between 100 to 250 million naira for a detached house. And definitely a lot of conversations around, the mortgage system in Nigeria. That's been plagued by high interest rates because we have the central bank on one hand, trying to tame inflation, and they've been raising rates, for the longest time, and also trying to mop up excess liquidity from the Nigerian economy. And definitely that has impacted on most of these prices. How are Nigerians able to access affordable mortgage to actually make this happen? But let's have this conversation now. We have Modupe Andros, ESV Modupe Andros is the MD CEO, Rydal Mills Limited, and she's joining me right here in the studio. It's great to have you. Good morning.
Good morning.
I'm sorry, I know the traffic that held you. It caught me, coming to the office myself, but finally, you made it here.
Yes, thank you for having me.
It's great to have you.
Yeah.
So a lot playing out in this market. Looking at these prices, as a salary earner, I'm wondering how I'm going to be able to afford this, even with the kind of mortgage system that we run in Nigeria right now. We have interest rates from 25 to over 30% at this point. So that's looking like I cannot afford a mortgage at this point. So how are you seeing the sector, so far in 2024?
Well, we're in very unprecedented times in Nigeria at the moment, and the real estate sector I can say that Nigeria is playing in a very moderate growth at the moment. Even with the challenges that we have in Nigeria, we're in a very moderate growth. And I'll say a moderate growth because with the devaluation of the Naira, it's giving the people in the diaspora opportunities to want to invest in Nigeria. And because they have a stronger currency, a lot of demands are coming in. However, because the cost of building materials have significantly increased, developers have to increase the prices of properties, which also would mean that the local people are unable to afford these properties at the moment. But because of the devaluation as well, investors are looking at shifting investments into real estate because real estate is growing astronomically. And then when we look at all the major urban areas in Nigeria, Lagos, Abuja, and Port Harcourt, for instance, with some of the infrastructure development that is ongoing in Nigeria, new roads, the bridge going from all the way from Lagos all the way to cross rivers and all of that, it enhances development. But developers are going through a lot of headaches right now because they have to increase the prices of their properties significantly. And with property increase, I'm wondering, what's demand really looking at? You did mention, diaspora, they have stronger currency at this point, so they're able to pour that in. I'll tell you, the demand is high. The demand is growing because, just like I mentioned earlier, people's investment, people are shifting. There's a paradigm shift. People are shifting from the stocks market and some of the forms of investment that they've keyed into, and they're trying to secure their funds in the real estate market because the real estate market, in terms of stability, is stable. It might not give you enough liquidity immediately, but it's appreciating. So there's a demand from people that have access to funds already, from the diaspora market and investors, local investors. Right, and talking about, everyone's trying to beat inflation at this point and also try to beat currency devaluation, most investors, in this country. So, we keep touting different asset classes as that inflation hedge. Yes. Is real estate in Nigeria still that? Oh, certainly. Real estate in Nigeria, in terms of inflation, the inflation would affect real estate in all ways. Like I said, developers are finding it difficult to buy materials, building materials at the cost in which they used to buy these materials for initially. Now they're buying it at a higher cost. Inflation has come to play in that regard. However, and then the rental values have gone up significantly because it's a ripple effect. When the cost of a property goes up, the return on investment on that property has to be able to be commensurate with the value at which you're buying the property. So the rental values for the property have gone up. But the supply of properties in comparison with the demand in property right now, considering that we have a minimum of 20 million housing deficits, not to talk of the number of people that we have not put into the population census, So the investors will consider buying because they know there's a high demand, which would also be affected in terms of inflation. Right, and I was speaking to someone earlier, and he did tell me his landlord increased his rent recently, citing, the same issues at this point. So it's like sitting tenants are not having that privilege at this point, because most of the time, a sitting tenant would be, afforded some, good value, when it comes to rent. But now we're seeing the landlords having to hike, even on sitting tenants. They're not waiting to kick them out and getting new tenants. So we are vast in property management. So when you talk about sitting tenants and new tenants, we're in the core of it in my organization. So sitting tenants are also affected, even though incoming tenants are significantly affected because they have no choice. But a sitting tenant can negotiate his ways, well, if he has a considerate landlord. Maybe good behavior. Not necessarily. he shouldn't have a relationship that will show character behavior on his property. Having said that, owners and investors, they are also looking at increasing prices because of inflation, devaluation of the naira, the use of the funds. What your money can buy for you now is like 50% of what it could buy for you a couple of months ago. I'm not talking about a year ago. We have a project that we're marketing at the moment, and would you believe that the price of that project has increased on 3 occasions? And it has not been delivered yet. So everybody has to meet up with the cost of funds. So a landlord might have international commitments, and he would also look at the cost of the funds that he's getting from the property that is on rent.
Right. So definitely challenging times in that market, and I love the way developed economies track their housing markets. At least in the U.S., most of the week we're getting household housing data most of the time. But here we're still trying to get our fingers on data when it comes to new developments and sales and all of that. So looking at 2024. Generally, would you say realtors, did they cash out in 2024?
Or did investors cash out?
Right.
Not realtors. We are just middlemen,
right,
if you would say so. So every year, there's a reason why there's an increase in demand for real estate. In 2024, the devaluation, the inflation has caused a ripple effect in the demand for real estate. However, a majority of Nigerians cannot afford this real estate. Like you mentioned earlier, mortgages are not, they're nowhere to be getting close to, because you're getting a minimum of 30% on a mortgage from a commercial bank. So I will say to you that even if it feels like investors are cashing out in terms of real estate purchase, increase in the value of the property, you also need to understand that the value at which they are buying the property now is astronomically high. So we're looking at properties in Lekki 1 going at 750 million for a detached house. Meanwhile, a year ago, there's probably a 200 million less on that same property. So the purchasing power of people has not increased. So I don't call it cashing out. I just feel that, I believe that people are buying because there is a lot of uncertainty, and they're trying to hold on to their funds and make sure that their funds don't devalue anymore.
Right, and we don't shelter. Very, very important in the scheme of things.
Certainly.
Well, thank you so much. It was great having your perspective. ESV Modukwe and just is the MD CEO, Rider Mills Limited, and she made it regardless of the traffic. Thank you so much.
That is part of the infrastructure deficit we're talking about.
Exactly. Thank you for coming on today.
Thank you for having me.
All right, we'll take a quick break now. When we come back, we head on to the commodities market. That's the moment to stay with us. All right, so we know the Dangote Refinery, one of the largest and most anticipated projects in Africa, has made headlines once again, this time with a significant shift in its crude oil sourcing strategy. After a 3-month hiatus, the refinery has resumed importing crude oil from the United States. Let's talk to Dumebi Oluwole now, senior economist at FDC. Great to have you, Dumebi. So why has Dangote Refinery decided to resume importing crude oil from the U.S.? I know I saw WTI earlier, still sub $70.
Yes, I mean, from all indications, it's not exactly clear as to why the refinery has gone that route, but it is very clear that there is some level of supply shortages from local sources, because if the refinery decides to opt for importing, crude oil for them to refine and at least meet up with their production, making sure that they're able to produce at full capacity at their targeted timeline, which is by the end of this year, going into Q1 2025, what it means is that they're probably not getting enough from local sources, and they're forced to meet their supply gap with imported crude. And remember that I think the last time I came when I spoke about Dangote's refining capacity and how much the crude oil that the NNPC was going to be supplying them, which was about 400,000 barrels. 400,000 barrels of crude oil. Comparing that to their capacity, what you can already see that there is a shortfall. There's a shortfall in there, and more importantly, when you see how much they're able to refine from that amount of crude oil, you see that it's very low. It's about 20 liters, thereabout, 20 million liters rather, 20 million liters of refined petroleum crude. And when you compare that with Nigeria's, domestic demand and the fact that Dangote is trying to increase its production to not serve only Nigeria but also export to other neighboring African countries, with Ghana inclusive, you can see that there is a shortfall in supply that would eventually lead them not able to not be able to produce as much refined petroleum to meet domestic demand and also their exports. So I would say this is more of like a necessity right now that would have definitely spurred Dangote to eventually opt for importing.
Right, and FYI, Dumebi would have been here in the studio if not for the traffic coming to the studio today, but that's why Dumebi is joining us via Zoom. But now, talking about the Naira for crude oil deal, how does that impact, Dangote's sourcing decisions so far?
I mean, on the surface, what it's supposed to do is generally reduce the foreign exchange overhead, right, for Dangote, because the expectation is that if you're paying in Naira, it reduces the demand for dollars and reduces the operating cost for the company, right? So that's on the part for Dangote. For the economy in general, when you consider how much, FX will be needed to service all of these imported all of the operations for the Dangote Refinery. Like that's a huge FX, demand that will be coming from the refinery to meet those payments. And if the central bank and also the federal government is able to hedge on that to reduce the amount of pressure on Nigeria's FX market, it's obviously a welcome situation. So I would say those are like the two key implications right now for the in terms of the Naira for crude deal. For Dangote, basically it somewhat reduces their overhead costs, especially for foreign exchange related expenses. And for the federal government and with the CBN inclusive, it kind of reduces the demand for foreign exchange in Nigeria's FX market, and so to an extent, it's supposed to somewhat support or help the Naira when we're looking at it from the demand side.
All right, is there any advantage for the Dangote Refinery when it comes to shipping costs from the U.S. Gulf Coast?
I would say right now the key thing, especially when you read the news briefing on why the refinery has opted for this. Number one, when you build a huge infrastructure like this, when you have plans to ensure that it runs at its full capacity, it has to run at full capacity so that your infrastructure doesn't start getting redundant, right? That's one of the reasons why we see that refineries always have to run at their full capacity, especially except if at that point in time it's not supposed to run at its full capacity. But the Dangote Refinery has gotten to a point where it's supposed to start running at its full capacity. And for that to happen, they need those supplies, right? So that's exactly why this is happening. It's basically to ensure that the targets that the refinery has set for itself is able to meet those targets, meet the demand that it's supposed to service, both on domestic level and a regional level, right? So there's also the competitive aspect of it when you look at what is happening in terms of the global economy, right? The global refining markets, right? And you see that Dangote, purchasing crude oil from the US and also refining and possibly exporting as well. There's some competitive edge that Dangote gets in that regard, because now it will be a global player in terms of providing refined petroleum, resources to not only, West African markets, but possibly other European European or Latin American markets, right? So there's that benefit there. Then the other thing to also consider is the cost as well of WTI. So WTI is pretty much cheaper than Brent, and when you look at the current trend of global oil prices, and if Dangote is getting WTI, remember that these prices are locked in the future, so it's somewhat like basically forward contracts. And if you look at the current trend of WTI over the past couple of days, you see that it has been significantly lower than Brent. And since Dangote will be expecting a shipment at around December 5 from Chevron Corp, what this means is that they have been able to somewhat get it at a lower price, compared to the cost of Brent on a global scale. So to an extent, it's kind of, number one, they're able to meet their meet the requirements for their refinery to meet its full production, right? So they're able to now eventually produce refined petroleum refined petroleum goods, and then service the domestic market and also the other regional markets that will need this product, right? So they are basically getting those products to sell and make revenue. At the same time, you also consider the competitive edge that they would get, being a global player now in the refinery market, amongst other players in Europe, and the US. So then you now consider the final thing of cost, when they're importing WTI compared to Brent.
All right, maybe I guess the refining drama continues in Nigeria, but thank you so much. Always great to have you, Dumebi Oluwole. She's a senior economist with FDC. Thank you so much.
Thank you for having me.
All right, so the markets are open right now. We'll give you a summary of what's playing out at intraday. That's 1 p.m. on Business Incorporated. That's it from me on Business Morning. I hand things over to the Sunrise Daily team.